Morning and welcome to everybody, and thanks for the introduction. My name is Rod Baxter. I'm the Executive Chairman, and with me today is Justine Lee, our CFO. And we're excited to talk to you today about the company, provide you with an update, and obviously talk about our flagship Parkes Reef Platinum Group Metals project. So before I get into the presentation, probably just a bit of an explanation of that photograph that you see on the front of our presentation slides. And by the way, these will be on our website sometime during the course of the day, so you can refer to them later. So we're standing at the southernmost boundary of our tenements, which host Parkes Reef ore body. The ore body runs from left to right across this photograph, and as you all know, contains platinum group metals and base metals. Now, PGMs, platinum group metals, are rare. They're very interesting minerals. There's 6 of them in total. Platinum, palladium, and rhodium I sometimes refer to as the major metals. That's just the terminology that I use. But it's largely because they are the more common of the metals, and they have larger demand profiles and used in a much wider range of applications. The other 3 are iridium, ruthenium, and osmium. Very rare, very unique properties and very unique applications. And because of these unique properties, they've got very large range and multiple uses. So some of you will know PGMs, platinum, palladium, and rhodium used in auto catalysts. So those are in motor vehicle exhaust systems. They clean up and decarbonize the harmful emissions from motor vehicle exhausts. And they've actually been around since the 1970s. So they're probably one of the better known decarbonizers, and they've been around for a long, long time. Of course, these metals also have applications in industrial uses, in jewelry, investment, and a growing use in the hydrogen economy. And in fact, the International Platinum Group Metals Association, the IPA, has recently estimated that somewhere between 20% of all articles used in daily life contain or are made using a platinum group metal. So, very large application, very large use, and a major impact on the daily lives of each one of us. Our ore body contains 4 of those 6 PGMs, so platinum, palladium, and rhodium, as well as iridium, and iridium has a large use in the hydrogen economy, so we're very excited about that mix. We also have gold, nickel, copper, and cobalt. So if I was going to focus on only one slide today, it would be the one in front of you. And it really is a summary of where the business is right now, the markets, the macro environment, the micro environment within the business, and what we as a board are focusing on. Large ore body. It extends over a strike length of 15 kilometers. We currently have 7.6 million ounces of 5E PGM, so that's platinum, palladium, rhodium, iridium, and gold in our resource. And we've drilled that and defined our resource down to a depth over those 15 kilometers of strike of 250 meters. But you'll know that there's a lot of depth potential on this ore body. We have drilled down to 500 meters. We have done a lot of work around geophysical investigations that show that there's a very high potential that the host ore body will extend down to depths of more than 2 kilometers. And you can do the numbers. On 7.6 million ounces at 250 meters, what that ore body would look like over 15 kilometers if it extended down to 2 kilometers or more. 8 payable metals, I mentioned them earlier, which gives us an exposure and a leverage to all of the key PGM markets. That's the automotive, industrial, the hydrogen, and the investment markets. And this is a supply constrained environment, and we'll talk quite a lot about that later. We're making good progress around the metallurgical process. The metallurgical process is key to unlocking the future of this project. And our objective is to produce a high-grade, high-value, saleable PGM and base metal hydroxide products, which we can then vend into or toll treat in all of the major base and precious metals refineries around the world. So it gives us a lot of optionality. This is an experienced team. I've been involved in PGMs pretty much all of my life. And we have a group of PGM experts from around the world, all with very deep expertise in PGMs that are assisting us through our process. We're using metallurgical houses that have got deep experience in metallurgical processing. And we believe that we're aligned to shareholder outcomes, largely because the board and myself take part, or in my case, all of my executive fee in equity. So we've got a deep interest in the same kind of things that shareholders are interested in, and that is to create value from this business. The sector is in transformation. The PGM sector is undergoing transformation, and it has for the last 2 years. It's been an industry that has been under some pressure. PGM prices have been quite depressed, but it's coming through that, and it's emerging on the other side. And we're currently facing some very interesting dynamics in this industry as it emerges back into what I call normality. Some sustained deficits. We're in the second year of deficits for platinum and palladium. And platinum itself is forecast to be in deficit for at least another 3 to 5 years, probably the same with palladium, but that's all unfolding. Strong underlying demand fundamentals, very resilient demand outlook for all of these metals, and supply is under pressure. In fact, it's risk to the downside, which, depending on where that all unfolds, could exacerbate those deficits a lot more. So, the board is highly focused on developing this project. Our strategy has got 3 dimensions to it. The first, the most important, is to progress the project. The second has been over the last 12 months to ensure that we strengthen the company and make sure that we can take advantage of an anticipated metal price recovery when that happens. And the third is to pursue sector opportunities. And the Dhaka acquisition of EV Nickel's assets is the first of those opportunities that we have been pursuing. And I'll talk about some of that in the presentation. So let me move forward then. Slide just showing the board. It's a small board and it's an experienced board. The company has about 454 million shares in circulation, and the top 20 shareholders hold 35% of the shares in the business. And these are very, very supportive register. The project itself, Parkes Reef, located about 380 kilometers northeast of Geraldton. You can see the star and the blue part of the map on the left-hand side. And the red outline is our tenement package, which lies about halfway between Meekatharra and Kew in West Australia. And that is a highly credentialed and well-established mining area. So low geopolitical risk, well-established region for mining. We've got mining licenses, we've got native title arrangements in place, and as I mentioned, 7.6 million ounces in our resource. The business has made a lot of progress in the last 4 years. In fact, looking at the green ovals at the bottom of that graph, and I'll work you through it. 4 years ago, this business had a resource of 1.1 million ounces of 3E PGM, so 3E being platinum, palladium, and gold with some copper. In the last 4 years, we've expanded and increased that resource 7-fold. And in April of this year, we announced 7.6 million ounces of 5E. So not only have we expanded the resource, we've also extended the breadth of the resource to include rhodium and iridium, as well as copper, nickel, and cobalt, and gold. So, a lot of work being done around the resource. It's a large resource. It's an exciting resource. And as we said, the depth potential could be down to 2 kilometers. So there's a lot of upside. The other key message on this graph is, the high relationship between share price, which is leveraged to platinum group metal price. So if you look at the orange line on that graph, that's the Podium share price over the last 4 years, and the yellow and the blue lines are the metal price of a Podium ounce and the 8 payable metals. And you can see when the prices went up over the COVID period, so did the share price, and it's come back down. And that has been reflected in all of the share prices over the last 12 to 24 months. So this is a rather messy graph, but what it is just all rebased back to the beginning of the year. It's the share price performance of all of the key producers and our peers here in Australia. So you can see Anglo Platinum in there, you can see Northern, Sibanye and Impala, and some of the Australian peers as well. Everybody's moved sideways. I think it's important to point out that we have outperformed our peers, we're the orange line, but the fact is that the industry has been battling over the last 12 to 24 months because of the low metal price. As I said, we believe that we're coming through that. The industry believes we're coming through that with some really exciting indications on the other side. So let's talk a little bit about the market, because I think that's important before we talk about the business itself. And as I mentioned right at the start, PGMs have got some very unique properties with very diverse applications. And there you can just see some of them. Auto catalysts on the right-hand side consumes about 55% of platinum, palladium, and rhodium demand globally. There's electronic applications, investment, jewelry, industrial. Industrial consumes about 25% of all PGMs, even through to medical treatment devices. That's hip joints, knee joints. And I was talking to someone yesterday and mentioned, that cisplatin, which contains platinum, is a very well-known chemotherapy drug that treats breast, ovarian, and colon cancers. So all the way from drugs right through to motor vehicle applications for PGMs. If you were to look at the market on a page, and this is demand and supply, I'll walk you through this. So if you look at the pie graph in the middle, demand about 19.7 million ounces of PGMs this year. That's the projection. So close to 20 million ounces, and it's made up of platinum, about 39% of demand for platinum, about 50% for palladium. Now, if you look at where palladium is used and you move to the right-hand side pie, 85% of all palladium is used in the automotive sector, a little bit in industrial. Platinum, on the other hand, has a much more diversified use base, about 40% in automotives, industrial, jewelry, and other. Where do these metals come from? Platinum largely from South Africa and Southern Africa. So South Africa produces about 70% of the world's platinum supply, Zimbabwe another 9%. So Southern Africa about 80%. If you were to look at palladium, that's a mix between South Africa, Russia, and Zimbabwe, which counts for about 80 to 90%. So highly exposed to those regional jurisdictions of Southern Africa and Russia. There's also about 4.2 million ounces that comes from recycle. So this is recycle of auto catalysts, jewelry, and other applications. But if you were to add that up, if you were to add the platinum and the palladium and the recycle, you would see the deficits. And we'll talk about those deficits now. More demand than supply right now, and projected to be that way for a few years. So market in a nutshell, deficits, they're persisting, very resilient demand, supply is eroding, and of course there's a shift towards hybrid motor vehicles, which is very exciting. So let's focus on supply first, and I'll draw your attention to the left-hand graph. That's supply coming out of South Africa since 2007. You can see supply is dropping, and there's a number of reasons for that. It has to do with aging infrastructure, deepening shafts, cost inflation, but most importantly in recent times, it's the fact that the basket price, so the metal prices, are trading below the cost curve. A lot of these mines in South Africa, and for that matter around the world, are not making money. So their ability to react, to expand, to continue to invest and justify money to invest into replacement is very, very limited. And in fact, one or two of them have started to cut production. The World Platinum Council has projected, and that's the middle graph. That graph over there shows the dotted blue line, which is the likely supply outlook from those existing suppliers over the next 15 or so years. The brownish dotted line is an economically constrained environment, meaning if we don't get a metal price recovery, supply is going to drop off significantly over the next 15 years. And the right-hand graph shows secondary supply, which is the recycle, coming down as well for a number of reasons. Automotive demand is strong. The middle graph shows the growth, projected growth in motor vehicles, and for PGMs, particularly for palladium, that's underpinned by a resilient internal combustion engine demand. Obviously, those metals being used in the exhaust catalysts. I think what's really important is that this industry has suffered in the last 2 years by a very negative sentiment around the future of the internal combustion engine, largely because of the growth of battery electric vehicles. More recently, battery electric vehicle penetration has started to drop off, and that's the bottom right-hand graph. So if you look at the blue, that shows battery electric vehicle growth. It's coming down, and the brown shows the hybrid motor vehicle. And the hybrid motor vehicle is starting to grow at a faster rate and replace battery electric vehicles. And hybrids, of course, are a combination of a battery electric vehicle battery together with an internal combustion engine. They use and consume more PGMs than an internal combustion engine does, and that has to do with the temperature and the stop-start nature of the engine. So, a really exciting outlook for PGMs going forward, which are yet to be baked into the demand and supply picture. But battery electric vehicles certainly starting to be replaced by hybrids around the world. Industrial demand is steady growth. And of course, there's the hydrogen upside. And the middle graph is a projection by the World Platinum Council of platinum use projections in hydrogen through to 2030. And hydrogen consumes iridium and platinum, both in the production of hydrogen from water, as well as in the generation of electricity through the hydrogen fuel cell. And that would show that by 2030, if things grow the way the World Platinum Council believes they might, we would need to see another 1 million ounces of platinum being consumed into this new emerging industry. All the major countries around the world are funding hydrogen growth projects. And the latest estimate is that about $75 billion is currently being spent on projects to generate and drive the future of the hydrogen economy. So let's just have a look at the outlook for platinum and then palladium. The message for platinum deficits. And if we look at the top right-hand graph, you'll see since 2023, the market has been in deficit. This year, a record deficit, projected to be close to 1 million ounces and forecast to be in deficit for the next few years. Also, and quite importantly, surface stocks are starting to come down. So surface stocks peaked post-COVID at about 5 million ounces of platinum. Those are coming down. World Platinum Council projects that those will be down to around about 3 million ounces. Of course, very difficult to project these, but the point is that the OEMs are having to draw on their stock holdings to bridge demand because of the deficits. And the right-hand picture just shows the potential impact on platinum of a hydrogen economy through to 2040. The question would be, where's that platinum going to come from? Palladium outlook similar, leverage to automotives, and I'd focus on the bottom left-hand curve, which shows battery electric vehicle very stellar growth over the last few years, has now flattened during the course of this last year, but hybrids starting to pick up. And we see palladium really being driven by North America and the rest of the world in those loadings of these hybrids and internal combustion engines. So just to summarize before I move on, the PGM prices have traditionally always been driven by underlying market fundamentals, supply and demand. A number of events in and post-COVID led to a disconnect between price and those fundamentals. And in the recent past, over the last year and a half, 2 years, prices have really been driven more by sentiment and short selling than by supply and demand. The market is resetting. It has been for the last 18 months. Orders starting to come back into the market, and the outlook is starting to look positive. So I'd say there's some very interesting green shoots on a number of fronts. And I've listed some of those on the right-hand side of that picture. So, supply pressure, primary and secondary, robust underlying demand, persisting deficits, inventory destocking, what happens when those stocks have been consumed. Battery electric vehicle negative overhang, but now hybrids are starting to gain ground. And yes, there's still speculative short trading, which is impacting the spot price with spot volatility and range trading. But the picture is very positive for this metal going forward, or for all of these metals for that matter. So let's move on then to the project. Just a quick orientation back to our tenement holdings. So the blue on the left-hand side, the blue outline, that's the tenement package. It's very close to about 50 square kilometers. And the red dotted line at the bottom shows the location of our PGM, our Parkes Reef PGM ore body, which dips down towards the south, steeply at a dip of about 80 degrees or so, with a near surface expression. And all of those blue dots are each of the locations of the drill holes, 200-meter spacing, which have been drilled by Podium over the period of the last few years across the entire strike length of 15 kilometers, to give us a resource of about 7.6 million ounces of 3E PGMs, plus the base metals that you can see in the second bullet down on the right-hand side. This is a sort of a three-dimensional image of the ore body, showing the orange, which is where the resource lies, and you can see the depth potential going down. We're very excited about that. We're very excited about the upside. Not only are we excited about that, of course, but we're also excited about the fact that our ore body produces a mix ratio of PGMs that are very similar to the demand ratio. So if you look at the top center pie graph, that's the mass percentage ratio of platinum, palladium, rhodium, iridium, and gold in our ore in ground. About 48% of it is platinum, about 42% palladium. If you move to the right-hand side, you'll see the current market demand mix for those metals, with, of course, platinum increasing as we move into the hydrogen economy. So we're very blessed with an ore body that's very balanced, and the metal mix is in the ratio of the demand projections going forward, which is a very strong position to be in. In addition, we've got the largest platinum resource in Australia right now with 3.5 million ounces, and that's on the left-hand side at the top. We've got the second largest palladium resource behind Chalice, the largest rhodium resource, and we are, as we understand it right now, the only ore body that contains iridium, iridium being critical for the hydrogen economy. So the key to processing and progressing Parkes Reef lies in the metallurgical flow sheet. You know, the ability to economically and consistently extract the 8 payable metals is our highest priority as a business, as a board, and as the executives. And our last 12 months, we've been focusing on 2 aspects of this. The first is the development of our overall metallurgical flow sheet, and the second one is the focus on the flotation step, and I'll explain why in a minute. But if I focus or just draw your attention to that schematic of our metallurgical flow sheet, we are following a very conventional metallurgical flow sheet in Parkes Reef to process our ore. Starts with underground bulk or high-grade mechanized mining, followed by conventional crushing and grinding, and then a fairly conventional flotation and waste rejection circuit, which is under development now. That'll produce what we hope would be a high-grade concentrate, which we can move into our own conventional small base metals refinery, recover those metals, and our target is to produce a base metals hydroxide product and a high-value PGM product. The reason we want to do that is it gives us optionality to then monetize that through various downstream processing routes. And the reason we're following a fairly conventional process flow sheet is that each of those steps in that process flow sheet have all been proven. They're all existing processes utilized by a number of different resources around the world, particularly the PGMs. So it means that this is a very largely de-risked, proven flow sheet. Our task is to apply those technologies to the specific mineralogy and metallurgy of our ore body. Now, I mentioned that a lot of what we're doing is focusing on understanding and progressing the flotation step. And the flotation step is key to the project economics. It's all about extracting as much of the PGMs as possible, but at the same time, it's about rejecting as much waste in the concentrate. Because the more waste you can reject, the easier it is to handle that concentrate in the downstream base and precious metals refinery processes. So at this stage, over the last 6 months, pretty much all of our focus has been on flotation. You know, at this stage, we understand very strongly what the drivers are of flotation performance. We understand the performance targets and, you know, the specific influences and the significant influences that these levers have on flotation performance. And our focus going forward is going to be to pursue performance levers and drive specific outcomes in the next phase. And that's the subject of our capital raise, which I'll talk to you about later. Just out of interest, on the left-hand side picture there, that's a rougher float cell in our labs in South Africa, and the goldy color on those bubbles at the bottom with the black ring around them, that's the PGMs, and then you can see the concentrate, rougher concentrate that we collected from that particular test on the right-hand side. So, you know, in terms of the development focus for this business in the near term going forward, it's all about flotation. It's all about targeted flotation performance improvements, both for the bulk ore body, the 15 meter wide sulfide ore body, as well as high grade. We haven't done any work on the high grade hanging in footwall, and we want to do that in the next stage of work, and building those learnings back into enhancing our flotation circuit and our overall metallurgical circuit. We'll need to do some technical drilling at the start of this next phase, and that is largely to secure some diamond core and some fresh ore for that metallurgical test work. The outcome of that, we believe, will enhance our production model, allow us to refine our project strategy. And in parallel to that, we'll also be pursuing a number of the corporate activities which we've started now, and that includes strengthening our industrial relationships and relationships with the industry, looking for technical and other cooperation opportunities, and pursuing value accretive corporate initiatives, one of those being the acquisition of the EV nickel assets. And let's turn our attention to that. So you will know that we recently announced a DOCA, a deed of company arrangement, to acquire the assets of EV Nickel, which was in administration. That has been supported by the creditors of EV Nickel, and it's now subject to the approval by Podium shareholders for the issue of shares to Johnson Matthey and FIRB. And I think it's worthwhile just spending a couple of minutes talking about this. So take you to the left-hand side picture. That's a plan view again of our tenements. In this case, unlike previously where there were blue outline, these are red outline. So the red outline is our tenement package. That's the 50 square kilometers. The wavy orange line at the bottom, that's the location of the Parks Reef PGM ore body. And that's Podium's flagship PGM project. To the north of that, you'll see the amorphous greeny blue mass. That's the oxide mineralization, the rights to which are owned currently by EV Nickel and have been for a number of years. And that mineralization holds a nickel laterite project and some very interesting chromite resources. EV Nickel has published a resource for that ground. It's unverified by us, but the resource apparently holds about 2.2 million tons of nickel. So these are two contiguous projects. They're located right next to each other. And Podium sees some substantial synergy benefits of being able to put those together. And that's what we're targeting through this acquisition. We're targeting the opportunity to reconsolidate those oxide and sulfide rights back onto our existing tenements. As I said, the DOC has been approved by the creditors. It now needs shareholder approval, and we'll do that at our AGM at the back end of November. What's the scope of the DOC? It's all about acquiring all of the tenements of EV Nickel and the associated licenses. And the consideration has been published. It's on the right-hand side. It's 117 million in cash with some issue of shares to Johnson Matthey and to EV Metals Group. They're the holders and the owners of EV Nickel. As well as the grant to Johnson Matthey of a 1.5% net smelter royalty over EV Nickel's Range World project. So that's not over the PGMs, it's over the nickel and the chromite project that we showed earlier. I think it's important that I talk a little bit about Johnson Matthey. Johnson Matthey is a truly global PGM player and a large industry leader in downstream PGM metal processing for end-use applications. This is a business that's got a long history. It's been around since 1817. It's listed on the London Stock Exchange, large. It has a market cap of just over 6 billion Australian dollars and operates very diversely over 30 countries with just over 11,000 employees. And over that period of time, the company has built up a reputation of being experts in complex metal chemistry. They produced the world's first motor vehicle exhaust catalyst back in 1974. And as a consequence, they've now built their entire business around that. So they've got three divisions. It's their clean air division, which is really their auto catalyst business, where they design and manufacture motor vehicle auto catalysts. It's their catalyst technology division, which is really their industrial markets, where they produce catalysts for industrial applications. And there's a wide range of those. And then there's their hydrogen technologies, which is their green hydrogen and fuel cell business, where they produce components for fuel cells. Johnson Matthey is also the largest secondary refiner of PGMs globally, and they also have the largest liquidity hub. So that's their metals trading and clearing hubs for moving metal around the world. So it's a large business, and it's a substantial company with a lot of networks into the PGM sector. And if we look at the potential benefits that we see coming from this acquisition, if shareholders were to vote for that, the most important being the ability to reconsolidate those assets back onto under one umbrella and onto Podium's land. which we believe will not only reassert our primacy over those mining leases, but will simplify project development. And we think that there's an opportunity to explore joint technologies and develop synergies between those two projects going forward. We shouldn't lose sight of the fact that this is a cheap counter-cyclical acquisition that we're doing here. Very exciting for us. It's a large nickel laterite project that we'll be acquiring at a very low point in the nickel price in the market. And we shouldn't also overlook the opportunity to see Johnson Matthey's size and stature on our register. So bringing us then to the capital raise, the equity raise, which we announced yesterday, or should I say last week, but which kicked off yesterday. It's a fully underwritten, non-renounceable rights issue. We're looking to raise about $3.64 million. And the use of funds largely into the project work, which I talked about a few slides back. So about 70% of the money net of the fees is going to go into the flotation work, technical drilling work, and the improvement of flotation and our metallurgical flow sheet. Some of that will go into some tenements work and a couple of corporate overheads that we have picked up, which as a consequence of the EV nickel docker. But most of the work going straight into funding the metallurgy and the metallurgical work in phase 2. This is just a summary of the rights issue. So as I said, raising 3.64 million, or targeting that, issue price of 3.2 cents a share. And that's 1 share for every 4 shares held in the rights issue. And there's also a free attaching option for every 3 new shares that people acquire through this rights issue. The opening date was yesterday. It opened yesterday on the 4th of November. Closing date next Thursday on the 14th if we choose not to extend it. And yes, it's at a healthy discount. We understand that, we appreciate that, but we feel that this raise is attractively priced and it's designed to allow all of our shareholders to benefit and participate in this. And we do hope that they all choose to do so if they're able to. So my last slide then, and I'll pick up where I started, just in summary around the business, the investment proposition, and what this business holds, what the proposition is for Podium. Firstly, we can't not look past the size and the scale and the basket composition of the Parkes Reef ore body. It's a 15-kilometer strike. It has 7.6 million ounces. That's only modeled to 250 meters with some depth potential and very, very exciting upside on the resource alone. Located in a very friendly mining jurisdiction. We've got mining licenses, native titles in place, 8 payable metals, which really gives us great exposure to all of the PGM markets, or at least the key PGM markets. And we're making good progress in developing our metallurgical process, targeting very high-grade saleable products here to be produced here in Australia from our own flow sheet. The market's resetting. The outlook is positive, and we currently see some really interesting dynamics unfolding on the back of those market deficits, very robust PGM demand fundamentals, and downside supply risk. We expect to see that sentiment, which has been impacting very strongly the metal price, starting to wane as this market continues its reset over the short term. This is an experienced team that's running this business. Myself and the rest of my team have all had a lot of deep experience in mining, in developing mining projects, and particularly in PGM projects. We've got world experts guiding us and participating at the technical level. We've also got very deep industry relationships that we are exploiting going forward. We've got a clear strategy. We know what we need to do with this project, and we're knuckling down to do that. The business, we believe, is highly leveraged to a metal price recovery, which we think will have a re-rate opportunity. But we're not waiting for that. In parallel, we are developing our project. We want to see Parkes Reef as the first, if not one of the first, PGM producers from West Australia going forward. And to do that, we're making sure that we continue to expand on our processing work, continue to add to our intellectual property in this business, continue to work our market relationships, and drive creating value through the optionality for upside growth. So, a very, very quick overview of a number of slides. As I said, this will be on our website. very, very happy for you to reach out to us, make contact. We'd love to talk to you if you have questions. Hopefully that gives you a bit of an overview and an update on the project. Thank you to those of you who have dialed in live to listen to this. We will put this recording onto the website so yourselves or others can access this later. Appreciate your participation. Thanks very much, and have a good day.